Welcome to Dual Edge Research, where we provide disciplined, data-driven strategies designed to help investors succeed across multiple markets. Dual Edge Research publishes two powerful newsletters that work great individually and even better together. The Bull Strangle newsletter focuses on stocks and options, combining stock ownership with premium selling strategies to generate consistent income and market-beating returns. The Smart Spreads newsletter specializes in seasonal commodity futures spreads, offering a diversified approach with low correlation to equities. Together, they deliver a complete investment perspective, one focused on income, the other on diversification, all under one simple subscription. Two powerful strategies, one disciplined source, Dual Edge Research. This video will focus on the Smart Spreads newsletter, which provides weekly seasonal spread setups, each with predefined entry and exit dates, historical performance metrics, and margin-efficient trade structures. In this video, we explore how seasonality creates powerful trading opportunities in the world of commodity futures. You'll learn how Smart Spreads uses decades of historical data, supported by a vast array of technical and fundamental indicators and analysis, to identify recurring seasonal patterns, from grain harvest cycles to energy demand shifts, and convert them into low-risk, data-driven spread trades. Before we dive into seasonality, here's what to expect from the Smart Spread strategy. Each trade is an intra-commodity or calendar spread, buying one month and selling another within the same market. This structure naturally reduces risk, volatility, and margin requirements. Trades typically last 12 days to several months, focusing on swing and position trading, not day trading. It's a slow and steady approach built on discipline, data, and consistency. Smart Spreads emphasizes risk control, limiting exposure to under 2% per market and under 3% per group, while spreading trades across multiple sectors. The goal is to profit on about 65% of trades with a win-to-loss ratio near 1.4 to 1, producing steady compounding growth over time. In short, Smart Spreads is balanced, diversified, and data-driven, a methodical strategy built for consistency over speculation. The Smart Spreads strategy is built on four foundational elements: commodities, futures contracts, seasonality, and spread trading. Together, these components create a structured, data-driven framework designed to identify repeatable opportunities in the commodity markets. This video will focus on seasonality and spread trading. Commodities and futures contracts are discussed in more detail in the video, Commodity Futures, found on the Dual Edge Research YouTube channel. Back to our main topic. One of the most reliable and consistent forces in the commodity markets is seasonality, the tendency for prices to move in recurring patterns at certain times of the year. Unlike equities, where price movement is often driven by corporate earnings or broad macroeconomic news, commodity prices are shaped by natural and logistical realities, things like planting, harvest, storage, and consumption cycles. These patterns repeat because they're grounded in physical supply and demand, not speculation. For example, grain prices often rise during the summer growing season when weather risk is highest and then weaken after harvest as supply peaks. In energy markets, products like gasoline and heating oil show strong seasonal trends tied to driving and heating demand. Gasoline tends to strengthen in spring and summer, while heating oil typically rises into the colder months. Livestock markets, such as cattle and lean hogs, also follow seasonal rhythms. Prices tend to climb heading into the U.S. grilling season and tighten again during the winter months. And soft commodities, coffee, sugar, and cocoa, exhibit seasonal price movements based on harvest timing and export schedules. These patterns have persisted for decades because they reflect real-world fundamentals: weather, planting schedules, inventory buildup, and consumption demand. By understanding and quantifying these recurring cycles, Smart Spreads identifies the seasonal opportunities that provide a consistent trading edge year after year. Seasonality becomes most effective when it's applied through spread trading, a structured approach that focuses on the relationship between contract months rather than outright price direction. A commodity futures spread involves taking a long position in one futures contract month and a short position in another within the same market. This design naturally reduces overall risk because price shocks in the broader market affect both sides in similar ways. Instead of trying to predict whether prices will rise or fall, spread trading targets the relative movement between contract months, exactly where seasonal tendencies tend to be the most stable and predictable. For instance, a trader might buy July corn and sell December corn to capture the historical pattern of tightening spreads during the summer growing season. Because both sides of the spread are within the same market, margin requirements are smaller and volatility is reduced. The true trading edge comes from the expected seasonal shift in supply and demand between contract months, a force that repeats year after year and forms the foundation of the smart spread strategy. At Smart Spreads, every trade idea begins with data, not opinion. The foundation of our approach is a robust backtesting engine built on more than 15 years of historical market data. This allows us to measure, verify, and quantify the seasonal tendencies that form the backbone of every trade. The system reviews all major commodities and their contract months across multiple sectors: grains, energy, livestock, and softs. It tests every possible entry and exit month combination to identify which spreads have produced the most consistent results over time. Through this process, backtesting uncovers spreads with the highest historical profitability and the most manageable drawdowns, the kinds of patterns that repeat year after year because they're grounded in real market forces. Each spread is scored using key performance indicators. Number 1, hit rate, the percentage of years the trade was profitable. Number 2, average return, the historical profit potential across all tested years. Number 3, drawdown, the worst peak-to-trough decline used to assess risk. These metrics help us filter thousands of possible trades down to only those with a proven edge and consistent performance history. The result is a ranked list of high-probability seasonal opportunities, trades that have stood the test of time and are then further validated through technical and fundamental analysis. At Smart Spreads, seasonality is only the starting point. Before any trade is selected, we confirm the setup through both fundamental and technical analysis, creating a complete market perspective that validates each opportunity from multiple angles. The Smart Spreads newsletter combines years of historical research with real-time market intelligence. Every trade idea is reviewed through a detailed set of indicators designed to measure market strength, positioning, and risk. This ensures that seasonal tendencies are supported by both data and current market dynamics, not simply historical averages. Each Smart Spreads newsletter includes a variety of technical and fundamental tools to confirm seasonal trades. Price action measures short and medium-term momentum trends. Relative strain index identifies overbought or oversold conditions. CTA positioning tracks hedge fund and trend follower activity. Commitment of trader data shows how commercial hedgers and managed money are positioned. Relative price and position compares current prices and trader positions to historical averages. Carry and roll evaluates price relationships between near and deferred contracts, plus key market metrics like volume, open interest, expiration dates, and volatility. By combining fundamental insight with technical precision, Smart Spreads ensures that each trade setup is validated from every angle, confirming that seasonality aligns with market structure, trader sentiment, and capital flow. This dual-layer confirmation process transforms seasonal patterns into high-confidence, data-backed trading opportunities. Seasonal spread trading offers several key advantages that make it both efficient and consistent. First, diversification. Commodity futures have a low correlation to the stock market, and lower margin requirements allow positions to be spread across many commodity markets. Second, tax advantages. Futures fall under Section 1256 of the tax code, meaning gains are taxed at a blended 60% long-term and 40% short-term rate, which is often more favorable than stock trading. Third, clear planning. Each trade follows predefined entry and exit windows, creating a straightforward, rules-based process for planning and execution. And finally, consistency. These trades are built around recurring seasonal price patterns driven by real supply and demand forces, not speculation. Together, these benefits make seasonal spread trading a disciplined and repeatable approach to the commodity markets. Seasonality is the foundation of the smart spread strategy. Each trade is validated with technical and fundamental analysis, tested over decades of data, and executed through low-risk futures spreads. It's a disciplined, data-driven approach that transforms natural market rhythms into consistent, repeatable trading opportunities. Looking for consistent profits in both stocks and commodities? Now you can get 2 powerful newsletters for one simple price. For stocks and options, the Bull Strangle newsletter shows you how to combine stock ownership with dual option selling, a disciplined strategy that has consistently outperformed the S&P 500. For commodity futures, the Smart Spreads newsletter focuses on seasonal commodity spreads, a proven, low-correlation approach that thrives in all types of markets. Each newsletter is designed to deliver consistent income on its own. But when used together, they create a complete, diversified trading approach that works in any market environment. Subscriptions start at just $49 a month, with deep discounts on 3-month, 6-month, and annual plans. And right now, for a limited time, your first month is only $1. There's no long-term commitment. Cancel anytime. So don't wait. Visit bullstrangle.com/products. That's bullstrangle.com/products. And start trading smarter today with the Bull Strangle and Smart Spreads newsletters.